Native Americans were legally denied business loans by banks and lending institutions until 1974. Yes, 1974. Which means your parents were alive when Indigenous people couldn't get financing to start businesses, buy equipment, or grow enterprises solely because of their race, creating systematic economic suppression that kept Native communities in poverty for generations. Ready to find out how the financial system was deliberately designed to prevent Indigenous economic independence even after civil rights laws supposedly ended racial discrimination? For most of American history, banks could and did refuse loans to Native Americans based purely on race, using excuses like reservation land can't be used as collateral or tribal membership makes creditworthiness uncertain. But the real reason was systematic exclusion designed to keep Native people economically dependent. The Indian Reorganization Act of 1934 was supposed to help tribal economic development, but it didn't address the fundamental problem that banks wouldn't lend to Native individuals or businesses, leaving reservations without access to capital needed for any kind of economic growth. Even after the Civil Rights Act of 1964 banned racial discrimination in many areas, lending discrimination against Native Americans continued legally because banks claimed reservation status and tribal jurisdiction created unique complications. This was just another excuse to maintain exclusion. It wasn't until the Equal Credit Opportunity Act of 1974 that it became explicitly illegal for lenders to discriminate based on race in credit decisions, finally giving Native Americans legal protection against being denied loans solely because they were Indigenous. But even after 1974, practical barriers remained. Many Native people lived on reservation land held in trust by the federal government, which couldn't be used as traditional collateral, making it nearly impossible to secure loans even when discrimination was technically illegal. The economic impact was devastating. Without access to business loans, Native communities couldn't start businesses, create jobs, build infrastructure, or generate economic activity that would lift them out of poverty. The financial system ensured they stayed economically suppressed. Compare this to other Americans who could walk into a bank with a business plan and get a loan to start a restaurant or shop. Native Americans with the same qualifications were turned away because of their race, losing decades of potential economic development. The reservation system was designed to create economic dependence. Native people were confined to specific lands, often the least desirable, then